Welcome back. We're going to wrap up Chapter 2 with a discussion of the trial balance. So the trial balance is not an actual financial statement. Let's say that first. It is what we call a schedule, or I like to call it a pseudo statement. So a schedule or a pseudo statement is one of those internal only schedules. We're never going to publish this or release this to investors or creditors or anything like that. It's an internal only schedule. And quite simply, all we're going to do is list every single account that we have and what its balance is, and whether it's on the debit side or the credit side. And then we're going to add them all up and make sure that debits equal credits. So it's really just a check to make sure that debits equal credits. So if we find, for example, that debits don't equal credits, we know there's a mistake somewhere and we need to go back and fix it. So here we have, again, our sample company, Jess, Bora Consulting, and we've listed all of our accounts. Now, one thing I want to point out is that these accounts are listed in account number order. So all your assets will be first, then your liabilities, then your equities, then your revenue, then your expenses. And we quite simply just listed all the accounts, listed their balances, notice the columns are debit and credit, and we added them up and we double checked. If we find that the balances again aren't the same, aren't balanced, then we need to go back and find our mistake, because if we go forward, we'll never be able to balance the balance sheet because it's not correct. Now, how often should we do a trial balance? Well, that depends on your company, but you can do them however often as you want, weekly, every 2 weeks, monthly. The more often you do them, the easier it is to find your mistake. So if you do them weekly and you find a mistake, you know that your mistake is over the last week because it balanced last Friday, but it's not balancing this Friday. If you wait a whole month, well, now you've got a whole month to go back to find your mistake. So it kind of depends on how many transactions you do. But again, once we get through and we've assured that they balance, we'll double underline at the bottom. Notice we've double underlined here, and we'll move on. So after we've done the trial balances, the next step, assuming it's the end of the quarter or year, we'll do the 3 financial statements. So we talked about these at the end of chapter 1. Remember, the income statement is the first financial statement that we do. It has the revenues and expenses. It helps us calculate our net income or our profit. Then we do the statement of owner's equity, which shows us our beginning capital balance, if there was any new investment, as well as the net income minus any withdrawals, and that gives us our ending capital balance. And then we do our balance sheet, which shows us the balances of assets, liabilities, and equities for every account. So this is just an example. We can see our trial balance here. Notice that every account on the trial balance is used once and only once on the financial statements. So every account is used, but they're only used once. Now, capital shows up twice. It shows up, I realize this is hard to see on the screen, but capital shows up here on the statement of owner's equity, as well as down here in the balance sheet. However, the difference is that this number down here in the balance sheet is not the capital number off of the trial balance. So remember that capital number on the trial balance is the beginning capital amount, and then we calculate the ending capital amount, and that number is what is used on the balance sheet.